Hi, I'm Alyssa Maloof Whatley. I'm an Atlanta-based tax attorney and legal educator. I spend a lot of my time educating my fellow colleagues on the law, and I thought it would be a great opportunity to help some of you understand institutional racism, specifically in tax. I was inspired to create this video because I had seen other professions, such as the medical profession, share their experiences about how people of color are affected in their areas of practice and what we can do to help educate ourselves about that disparity and how people of color are treated in our institutions. In order to talk about institutional racism, specifically in tax, we have to go back about 400 years to look at the history of our laws and how they have changed for people of color. So sadly in America, we've had a history of slavery, and this has still created issues for people of color today. And in order for us to connect all those dominoes, we have to see how the law has changed and evolved from being overtly racist to covertly racist. And so when we're talking about overtly racist, right, we started out with slavery and we got the 13th Amendment to abolish slavery. But in that, they left a small provision that people could be forced into work if they were in prison. I would encourage anyone, if you haven't seen 13 on Netflix by Ava DuVernay, I watched it last night and it was amazing, and it helps explain how all these little things are connected, right? And each step we become less overtly racist and become more covertly racist, and it's embedded in our laws and it's very difficult to see. For example, in constitutional law, if we had a law that was overtly racist, that would be easy to challenge. So when we make changes to the law that are just specific enough to cause a disparity in the result, that is where we're having an issue and further dividing the gap between white Americans and people of color. And so specifically when President Nixon was involved, this is where you can really see it's not explicit, right? They're not saying we're doing this to hurt people of color. The laws in themselves create disparities that hurt people of color. President Nixon's advisor, he says specifically the Nixon campaign in 1968 that they had two enemies, the anti-war left and black people. We knew that we couldn't make it illegal to be either against the war or blacks, but getting to the public associate hippies with marijuana and blacks with heroin, and then criminalizing both heavily, we could disrupt those communities. So this is an example of where you see something, they're not overtly saying it, but if we become tough on crime and we criminalize certain communities, certain groups of people, the end result is that they are harmed. It's not overtly racist, it's covertly racist. And this continued through Reagan's election. I think what really bothered me, and again, I was listening to these people, they're quoted on the video. You can hear them saying these things, and they didn't know these things were gonna come out, right, eventually. But one of the ones that really bothered me was Lee Atwater, who worked on Reagan's campaign. And this is what he specifically said, and it impacts me, and this all goes back to tax, right? He says, racial slurs could be used to describe Black Americans, but then that backfired, right? So it wasn't enough, we didn't have slavery anymore, so they couldn't use that. They couldn't use racist slurs, right? So he said that backfired. So it required you to use abstract language. Now you're talking about cutting taxes and all those things that are totally economic things, and a byproduct of them, blacks get hurt worse than whites, right? And so now you're starting to make these connections. It's not overt, it's covert, right? And it seems like we're just talking about the economy and economic policies, but the truth is it creates disparities. And so what I love about the Tax Policy Center and Urban Institute and the Brookings Institution is we don't specifically ask people's race when they fill out their tax return, right? But they were able to take data and piece it all together between people's tax returns, their race, ethnicity, their household size, their incomes, and put all this data together in an easily concise, simple charts and graphs and dialogue to help people see how laws that are covert have an impact on people of color. Let's take a look at the Tax Policy Center study of how our tax laws specifically impact people of color and encourage wealth and income inequalities between whites and people of color. And so what they did is they just used a simple 1040 form. And if you don't know what the 1040 is, it's the personal income tax return form that you file with the IRS every year. And there's all these different boxes. And obviously we don't have time to go through a 1040 and how each specific line impacts people of color. We're just going to focus on some of the larger ones. And the first one would be marital status. So generally speaking, people who file married filing jointly get a greater tax benefit than people filing married filing separately, generally better than people filing head of household, and generally better than people filing single. Now I say generally because each person's circumstance is different, but marital statistics show that whites, in fact, with just over half of all white households were married, and we're going to compare that to 27% of Black households and 48% of Hispanic households. So being married, whether you're married filing jointly, married filing separately, or filing single or head of household, all those have an impact on how much money that you pay in taxes. And so since people of color historically are not married, and let me go back, it's not a cultural thing. A lot of people of color, the study found, were not married because they cited financial instability as a major reason for not getting married, right? So they're already financially unstable, and then they lose the tax benefit of being married, right? So that creates even more disparity. So let's move on from marital status. One of the things that I like to talk about is how do we build wealth in America, right? How do we uplift people out of poverty? And unfortunately, how most people build wealth in America, the first thing is through home ownership, right? And on your taxes, you get a huge deduction. The government actually subsidizes housing in America through tax deductions on your Schedule A. You get to itemize the amount of mortgage interest that you pay. And so for a lot of African Americans, they are not homeowners and they cannot take advantage of that. And that goes back to systemic racism and institutional racism, where people of color were not allowed to get loans. Banks weren't lending to them. And if they were lending to them, they saw them as a threat. They saw them as unable to pay back debts and would charge them a higher interest rate, right? Which led them to oftentimes defaulting on loans. So in order to understand how wealth is built in America and understanding that home ownership is one of the quickest ways to build wealth, and them not being able to take advantage of that on a tax return is very important. And it's one of those overt things that are not, you're not readily able to see unless you're examining it. Another one that has always brought to the forefront is capital gains and investments, right? So people can invest their money in the stock market. They can buy stocks, bonds, whatever, right? And that money is oftentimes taxed at a lower rate than people's wages, right? So we let people invest, right, in companies, right? And that money grows and they can they end up paying capital gains, right? Which starts at 15%. Where somebody who's hardworking, maybe they work a low income job, maybe they're, middle class job, they're being charged a higher tax rate because they worked and earned wages than someone that was passive, doing passive investments. Now, we can make all the arguments in the world that people investing in companies and in our economy raises everyone up. But I think we've seen time and time again, trickle-down economics sometimes doesn't help those that are the most needy, right? And so that creates a problem when the quickest way to build wealth is investments, and again, retirement accounts, right? So a lot of people invest in retirement accounts, and that money grows tax-free until some people, take it out at retirement. Most people of color in their jobs don't have access to retirement savings that are typically offered through employers, right? So these are just more ways that Americans build wealth, and our tax code congratulates those people. Our tax code rewards those people by paying less taxes. And unfortunately, people of color are not able, a lot of times, to participate in those rewards and benefits because they do not have access to them. So now that we've talked about the Tax Policy Center's study, I also want to bring up some other interesting facts that have been found regarding how the Internal Revenue Service targets low-income individuals. So I started my tax career as a student at Georgia State University School of Law. And one of my favorite things about that program is we operated a low-income taxpayer clinic. And what that clinic did is provide free legal services to those that are under the poverty line that needed assistance defending themselves and their rights as a taxpayer against our federal government. And so that's when I first fell in love with tax. And it really opened my eyes to see that lower income individuals, specifically people of color, are often more targeted in audits than higher net worth individuals, higher income earners. And there's a reason for this. The reason for this is it costs the government $150 to initiate a correspondence exam for EITC credit. If you don't know what EITC is, it's the Earned Income Tax Credit. And it is a way for people to get refundable credits that work and that have dependents. And that credit can oftentimes be a make or break for these individuals. They a lot of times don't have savings. And so getting, their refund, their $6,000 refundable credit, they use that for emergency savings, they use that for emergency expenses. But the government targets them because it's cheaper for them to do so, right? It only costs them $150 and it only takes them about 5 hours. Where if we have an individual with over $10 million, right, and taxable income, it could take the government anywhere 60 to 251 hours to deal with that audit. So since the government has decreased funding for the Internal Revenue Service, unfortunately, what they've been doing is targeting lower income taxpayers and correspondence exams because it's cheaper. Now let's sit back and take that in for a minute, right? Let's say you're getting a $4,000 refundable credit or a $6,000 refundable credit. I'm a tax attorney. I guarantee you, unfortunately, I'm one of the lowest cost attorneys in town, I would say. And I think that all stems back from the tax clinic. But when you're gonna pay a tax attorney for an audit, most of my colleagues will just say $6,000, right? $6,000 is our starting line. That's what we're gonna do the retainer is. Well, if you're only entitled to a $4,000 credit or a $6,000 credit, why would you pay an attorney $6,000 to challenge that credit, right? It doesn't make sense. It's not financially sound. So what can happen is the IRS denies the credit, right? Maybe takes away their dependency exemptions. They deny the income credit. These people actually end up owing tax because they already got the refund and they spent it. And now they're having to challenge our federal government, but they don't have the resources to do so or the money to fight for their rights as a taxpayer. And that's really hard for me as a tax attorney to have to see individuals where it's just not worth the cost or they can't afford the cost. And again, that's where the low income taxpayer clinic comes in. But there's a lot of people that are in this, they're not below the poverty line, but they're not wealthy by any means, but they still can't afford proper representation. And a lot of my colleagues that are not lawyers, I would say tax resolution companies, these nationwide companies, target people of color unknowingly. These individuals don't know that they're not the companies, but the people that are listening to these ads don't know that they're targeting them. But when I'm driving around Atlanta and I, am listening to Hot 107.9 or 97.9, that are predominantly people of color, rap, local Atlanta artists, they're targeting ads specifically at people of color that have tax problems with the intent of charging them so many fees. They'll say, oh, you just pay us $250 a month and we'll take care of your tax issue. And by the end of it, they've paid $8,000 or $10,000 for representation that they never received. And so it's a whole system, this whole system that is disproportionately affecting people of color versus white people. And I see it every day in my industry. And I, as a white person, used to just be like, well, it's fine, right? Because I'm not racist. I represent taxpayers. I represent people of color. I do this work every day. And now I feel like we're to a point where it's no longer enough. It's not enough for me to sit here and say that just because I represent people of color and I defend people against our government every day, that I'm doing enough. So I wanted to take my role as an attorney. People trust me. They say that they believe that I understand our tax code, that I'm a knowledgeable tax attorney, obviously, or they wouldn't ask me to speak at these conferences and teach other lawyers. So I wanted to take this time to use my knowledge and resources to help others understand, even though you can't see it, it exists, right? And so I would encourage all other professionals in any other area of law, any other professions, to take the time to make a video for your community, for people to understand how people of color are disproportionately affected in your industry, and help people get educated on this topic. And I'm just going to leave you with one last story as an attorney about one of my most recent cases that I could almost cry. He came to me, and it's about having the rights to fight and having the resources to fight. So this tax preparer came to me, and he was charged with willful tax preparation. So the government claimed that he had fraudulently prepared tax returns willfully to get refundable credits for people, and he did not have the proper knowledge that these people were entitled to the credits, therefore costing the government a lot of money. My client had been fighting this battle on his own for a year. And he had gone to the audit himself. And what ended up happening was the government assessed him the tax, it's a civil penalty, without giving him due process. He never had an opportunity to challenge the tax. And he had filed his own tax court petition with the United States Tax Court. And that's when he came to me. They had filed a 75-page motion for summary judgment against him. There was no way that man could answer that motion for summary judgment himself. And honestly, when I looked at his file, I didn't think I was going to win either. I did not want to take his case, but he called me every day begging me to take his case. And eventually I was like, fine, if nothing else, I will learn from this experience and grow as an attorney. So I took his case. And one of the first things that I recognized is when I had called Chief Counsel's office to discuss this case, they did bring up the fact that my client was of a certain nationality. I don't know if they intentionally did that, but my client was a person of color from Nigeria. They seemed to insinuate that because my client was from Nigeria and that Nigerian people have a long history of lying and doing things fraudulently, that my client had lied and done things fraudulently. And at that moment, I knew that I was going to take this case, whether that client paid me $1 or never paid me again, because that is not fair. It's not right. It's not right to make assumptions. He said, wow, have you seen this guy, the way he runs his business? He doesn't even keep good records. Just because someone's a bad business owner doesn't make them a liar. It's as simple as that. And so I really worked with this taxpayer. The government office was assuming that my client had lied, that he did receive the right to a due process hearing. He did receive the letter, that they sent it. They knew they sent it, but they didn't have any proof that they actually sent my client the letter with his due process rights. And we ended up winning that case. It took me hours of unpaid work to win that case. But at the end of the day, my client, all of his penalties were abated on the fundamental argument that my client was not entitled to due process. They did not assess the tax correctly, and therefore it was invalid. And that was one of the biggest lessons I think I've ever learned as an attorney, that the government saw my client as someone who comes from a community that must be a liar. There was all these underlying assumptions that were not spoken, kind of understood. And I wasn't going to let that stand. And I think now it's time for everyone in every industry, even as a parent, as a mother, to take the time to talk about these issues in your own industry, in your own circles, with your own family, and with your children. So if I can ever be of service to you, Please reach out if you want to talk about these issues more. I'm happy to talk about them with you. We're going to put all the resources up on the blog. We're going to put it in the video comments. And again, I just want to say now is the time to speak up. If you've been silent before, like me, please take a moment to make a video, to say something, and really communicate your feelings, because it's never going to be bad to be on the right side of justice, and to advocate for your fellow human being. So thank you for watching. Thank you for taking the time to be here. And please use this as inspiration to make your own resources in your community.